traders? What up, investors? Aren't you glad it's Friday? The week is over. The hammer of pain has stopped until Monday, potentially, or Sunday night, depending if you're a futures trader. But yes, it has been a crazy week. Oh, what was going on here? What is this? Hold on. What is... What? 1 second. Take a phone call. Oh, yeah. Hey, what's up? Hey, WB, what's up, my friend? Yeah. You should go on CNBC and maybe help the market kind of slow down this bleeding. Give them that nice little like Midwestern kind of smile. Greatly appreciate that. Maybe talk about long-term investing, compounding interest over years and things like that. Just do your spiel, and maybe that will help the market come Monday. So can you do a favor for me? I greatly thank you, WB. And yeah, I'll see you at the barbecue this summer, without a doubt. All right, Godspeed, peace. Whew, sorry, folks. Warren just called me. Anywho, yeah, it's been a pretty crazy week on the sense of what's really gone on in the market. Again, on the show today, we're going to be talking about how GME is potentially dead, but we'll see about that. We're going to be also talking and linking a very great article you should read to kind of help understand the whole debacle, and it's one of the greatest articles I've seen in a while, talking about naked short selling, dark pools, and other various components of that. And at the same time, we're going to be talking about Fisker. So a lot of people have been asking about Fisker. This, of course, is another EV play that is up very substantially today. And then we're going to be talking about two stocks that I have in my watch list that I potentially would like to potentially trade and kind of look at the graphs or the charts and seeing how they could play out. And then we're going to, of course, do a complete market overview, really looking at SPY and QQQ on those various support resistance levels, and really just kind of taking in the damage that we saw this week at a further scope. Instead of just looking at it like on a ground level, we're going to kind of zoom out on a daily chart to kind of look at those price actions that we really saw this week. So without further ado, let's jump in here to the old Wall Street bets. The folks, of course, at GME is saying, this was just posted this morning, basically saying first 2 days of the squeeze and the very last 2 days, basically looking up, basically saying, hey, is this the last 2 days? This is going to be a next squeeze higher. This is again something that is so tremendously insane on the amount of the probability of this happening. Yeah, the odds were somewhat stacked against it, but let's be honest. Like this has been a really fantastic move for some people. Then, of course, sticking it to the big guys and so forth. But is this going to potentially going higher? We'll look at that chart here in a second. Let's go ahead and kind of look at this article. Again, this is going to be article is linked in the description down below. Basically, this is an interesting article. First of all, I like that you can do the listening automatically here. Basically, someone reads it to you. So that's, again, dyslexic. I love that. And then also going into some very great details. It's a little on the sense of just it's long-winded, but it really, if you're just understanding on naked short selling, it really highlights the issues with trying to find. So it goes in the article. If you've been trading for a little bit, you understand this on locating stock, so you're able to short it. Most large brokers, if you have a large position of GME or Tesla, the broker will approach you. It's like, hey, Ken, we see that you have 150 million shares of Tesla. Are you looking to sell those anytime? And I say no. And then they'll ask me like, hey, Ken, would you like for us to take those shares and we can sell short and we'll pay you an interest on top of that? And most people say no to that. Some people say yes. So you're basically holding Tesla or whatever stock long term. At the same time, you're getting an interest because, again, people are selling short those stocks. With the whole GameStop debacle, we were 145% short. So we were 45% above the shares that we had. It just kept on lending out the same stack of shares multiple times across different people. So it just made this really crazy 5 sigma gamma squeeze just go through the roof. Little article, check that out. And then, of course, we're going to be talking about Fisker. Fisker, is want to look at this chart as well. It's in Manhattan Beach, beautiful part of California. If you haven't been there, a little, not I was gonna say a little bit pricey. It's actually flipping pricey there. But and again, Southern California, without a doubt. So without further ado, we're going to be just jumping into the charts here and going through the Fisker, the GME, the Nasdaq, SPY, and the two trades that I kind of like for setups. So let's kind of just peruse our way to over here. Oh, and I just gave away one trade, which is a PENN. So you can look at that one. So let's look at GME first. So GME is, of course, GameStop. People highlighting that this setup is kind of looking like the previous one. The way I look at it, technically speaking, I guess that people could kind of make that correlation potentially. But the GME is kind of like the VIX. When you have this black swan event, like once in a lifetime opportunity, that's like it's basically this thing that everyone thinks that can never happen, but it happens. The stock will never. I don't potentially. Again, okay. Never say never, but the probabilities of it getting back to $500 is very unlikely due to the fact of the damage that has already been done. A lot of the paper hands being out of it. I know that Roy Kitty's still in it and things like that, but that is totally fine there. With that being said, once you have this huge black swan event like this, it really just reveals everything. So now you have to think like the hedge fund people. So just imagine having a nice suit and a very tight tie around your neck. That's a hedge fund guy, and you just think about making money, no matter what. So I had a cup of coffee, okay. So basically, the secret is out of the bag. The base has been found. The genie's out of the bottle. You can't put you can't put this toothpaste back in the tube kind of scenario, in the sense of like, the secret's out. Everyone kind of knows where to look. These moves potentially, again, there could be some other moves down the road that we just don't know about, of course, because we don't have a crystal ball yet. I'm still waiting for Amazon to order me that. It's literally been on hold for the infinite amount of time. It's on back order. So with GME, since this is like once in a lifetime opportunity, we could get like a dead cat bounce. I'm doing air quotes here, where we could see potentially a run up to 222, which, guess what? If we go to the smaller time zone on the hourly chart, we actually hit that. We almost hit that 222-ish level. We hit that first Fibonacci sequence again. Looking again, this is an hourly chart here. So again, this is going to be a little bit more broken down in time. So you're seeing that 513, which it made an after hours trading high, all the way to the low of 38.50. Again, just doing a swing high to swing low on the Fibonacci tree here via think or swim. But we're seeing a lot of resistance coming in around 150, and not really seeing the potential to break through it. With the potential squeeze setting up here, we have broken past the 34 EMA here on the hourly chart. So if we can get any kind of momentum and more volume coming into here, we can maybe see it up to 150, but 150 is going to be a pretty strong line right now to see if it can break through. If it breaks to 150, 222 is the next level. But again, we're talking about, is it going to go back to 500? The probability is kind of stacked against it. And again, like we just talked about, all those other numerous things that, again, the toothpaste is out of the tube. Try to put toothpaste back in there. It's a messy process. So that's basically my look at GME. So kind of looking at like the VIX. So the VIX is something kind of similar in the sense of, once something crazy happens, which it came out of nowhere. It's a rogue wave. It's a sniper shot or whatever. Like, no one suspects it. It creates this fear or this really aggressive move higher. Because again, who is the market? It's robots, humans, and robots, and douchebags that basically run this, like that are in the market, talking about the market, so forth. And really seeing this once in a lifetime. Again, I always say once in a lifetime. I love when people say once in a lifetime, because we have about 52 million once in a lifetime opportunities and moments, what I believe. So this really crazy move high in the VIX, and then everyone is like, hey, I think the VIX is going back to 85. And you kind of see it here, kind of failed, kind of went here, failed again, failed again. It's getting kind of these lower highs that we're kind of seeing coming in the market. We could, again, it has to have something with very strong movement coming through here. You can kind of see that $35 range potentially in the VIX could be the topping kind of level that we could be looking for. So kind of keep that on the radar. So with the higher yields going through, people are being fearful of growth stocks and things like that. Growth stocks always do come back. So it's just going to be a matter of correction. We'll be talking about that via the segment of SPY and QQQ. So talking about something else that's been running very hot, the Fisker. This is not a restaurant. This is an EV car company. Fisker, get your nice little chicken fingers and French fries here. Fisker, of course, is an EV car company play. We talked about it's like Southern California. I think that's one of the bullet points. When you create an EV company, it's got to come from California. Just a joke. So with Fisker, of course, this has been pretty much run around quite a bit here. We're seeing that really explosion higher on its very first earnings coming through here, looking for some highs around $30 on the next Fibonacci tree. But again, look at the IV, it's at 80% here. Look, and then these candles here, super aggressive here being said. Are people really investing in this? Is this the deal of the day and just the FOMO and all the this is the flashy light, the neon light for the day, and people just running to it? Maybe. I think again, a lot of people got hurt with CCIV. We'll look at that in a second and kind of break that down. But with this really large move higher, a lot of volume coming in here. Could it stay up there? It's a little bit elevated here on the RSI and the volume zone oscillator. On the weekly side, it looks like it wants to potentially going higher, but we do have a Fibonacci number around $29.53 to be very mindful about. And then we can also jump into CCIV. Of course, this is Lucid Motors. This had crazy amount of FOMO. So many people talking about it. Had me talking about it. I was in it for a little bit. Got out a little too early. I got out around 40-ish, maybe 45-ish. But missed this whole run up. But I did miss the gap down like this. Like this gap down was crazy large. Again, jumping from basically 57 down to 35 in a day. Large gap down. People, again, these SPACs, people don't quite do the due diligence and understand what the underlying value is to the share price, to what's the expectations. They just see, hey, SPAC, EV, let's go. Whoop, whoop. And they just run for it and just throw money at it. Even though due diligence, or DD, as I call it, and a lot of people call it DD, really just goes out the window. It's too much of gray in that sense with a lot of these blank check companies. Coming down here lower here, kind of bouncing around that $30-ish range, kind of that 34 EMA here. We'll see how this one turns out. Again, the damage has been done with this very large gap down here. So next segment, we're going to be talking about the market, the overall market, that is. We're going to be looking at SPY. Of course, that is the Standard & Poor's 500 ETF. Again, coming down to initial support. So if you're new to the channel, we use the red line as the 50 EM SMA, which again, most people like that 50 SMA, but I use a lot of the exponential moving averages. So it's coming down to tap, guess what? The 55 EMA, which we've seen tap a couple times. So could we see a boost higher coming into Monday? My wonderful, which again, if you want to check out that affiliate link down below, my stock trading almanac of 2021 says on March 1st, basically the first day of trading in March, the S&P 500 is up 17 of the last 25. And they give a nice little a bull symbol there. So the almanac saying, which again, just take it with a grain of salt, it's just historically speaking, 17 of the last 25, the S&P 500 on a Monday of March has been up. But then here's a caveat. Literally the next day, they give it a bear. So be very mindful of that. So again, we're looking for that potentially to hold here in the short term. If the S&P 500 is a more larger swing of multiple 11 different categories of companies, not like the Nasdaq, which is very heavy tech and innovation stuff. But with the S&P 500 down for the week, and basically kind of hovering in right towards somewhat of the, what is the beginning of the year? Yeah, it's still up for the beginning of the year, so that's good. Um, but with that, highlighting that, if we do get the 5 and 8 to cross through the 21 EMA, we can easily see this potentially break past that 55 and maybe run to 370. Sorry, $371.70, kind of hovering around the 89 EMA. So that's the 89 exponential moving average. You can see that here. That's highlighted in the teal color there, or baby blue, depending on what your eyes are telling you. With this potentially coming down to that level, that would be the next like sell off extreme support level. On that, potentially, if we want to have that turnaround play, we need to get back above that 34 and 21 EMA, which is basically around that 385-ish level. Let's go to the bloodbath, aka the QQQs, the Widowmakers of the week here. Yeah, this is was not fun at all here. Very choppy here, having multiple days of just seesawing of like ups and downs, and the roller coaster ride from, you can call it, if you're long or short, it was choppy for everyone. It was very much a premium selling kind of week towards the end of the month. It's always a little choppy on top of the interest rates, or the yield curve going back up on the 10 note. And so forth is really has caused some issues here. So with the 5 and 8 crossing through the 21 already, we're past the 55 EMA. You can kind of see here when I zoom in here that 55 EMA is around 317. So 317, you can see here, was been some level of support. But that 89 EMA has slightly come in here a little bit for support. So if we do get a pullback coming into next week, 309 is going to be potentially the level we're looking at. If that doesn't hold, hello 300. So that is going to be, we really want to see these moving averages starting to start curling and start basically trading parallel to the longer dated moving averages. I know there's a lot of lines going on here, but I will do a post on the YouTube and the Discord. And again, if you haven't joined the Discord yet, go ahead and join the Discord, completely free, down in the description below as well. Basically, so with the QQQ, just chop. This is just kangaroo market. I think a lot of people were like buying the dip here. That's where you kind of see that candle kind of come in here, being the heavier part being the tippy tip of the candle here, potentially trying to make a V-shaped recovery here. But the bear said, no, 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 no. No, no, no. The bear said, no, no, no. We're going to get you. And we're going to kind of keep you down a little bit longer here. If we want this trend to kind of get back into formation, it is broken right now. So imagine if you're a beautiful yacht right now, which again, that's what I consider myself, in being in a yacht one day, just kind of cruising, and then boom, you hit a rock out of nowhere. You're like, what the flippy floppies? And you're trying to run around, and your boat's taking on water, but you have a nice boat. You have some good people on staff that can help patch that hole in the boat up. They patch it up, and you're just kind of slowly cruising along, but the damage has been done. You kind of have to maybe turn around and go back to the dock and just kind of wait for things to settle down and fix the boat, or you can kind of go full throttle and put it up to 35 knots and just go full YOLO, which some people have, and I've seen some crazy losses in the last couple days here. I'm seeing people going super heavy and just putting every cent they have in the first couple days of the bounce here. Once we break past that 50 SMA, no, 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 no go. It's broken. We need to rebalance things. We need to check the portfolio. We need to make sure there's no damage done to our bodies on that impact. You need to kind of wake up, maybe throw some cold water in your face and take a hard look into the mirror. And things like that. So that's basically what we're looking for here. Initially, that support level around 309 to 310 for the Qs. With that, if we want to break above that, again, we need to get back above that 34 to 21 EMA, which is around that 322 level. So we potentially, if we do get a move higher, we could get a dead cat bounce and get somewhat of a bear or a bull trap here. And a lot of people buying out the potential breakout, but we need to start seeing these ticks slightly higher, because again, the damage has been done. We have to be very careful if we start allocating more capital and it's not just throwing things in blindly. So without further ado, I talked about two stocks, which again, that I am looking at for potentially on my watch list that has been triggered to some extent. The first one you already saw was PENN Nat Gaming. Of course, this is like kind of a reopening kind of play. You kind of see this chart here has been super aggressive like the overall market, but as you can see here, it has some relative strength in the sense of it's still above the 21 and 34 EMA. Like on the days where you're just feeling the pain, if someone was just giving you, I was born and raised in Germany. This thing called Brennnessel, which is a almost like a poison ivy plant. If someone just takes your arm and rubs, and it really creates these aching pains, where they take your knuckles and put them in your chest, whatever. Just the market was trying to make you call uncle and just kind of give up and just take and just throw everything out, which some things had to be thrown out, to be quite honest with you. Not you don't just hold and just hope and pray that things come back. So we're coming here to the 34 EMA multiple times for potentially short-term bounces here. We are holding that Fibonacci level around 116-ish. So if we do get a breakout, we're going to be seeing this kind of trading pretty tight here for almost most of the months of February, once we had that little top padding here around 130 and kind of came back down to kind of somewhat to consolidate here. If this move can continue here on the daily chart, we could easily see it try to come up back to 130. 130 potentially would be the breakout zone if we can get that running. Since we've already had earnings move going through, there isn't going to be a potential catalyst. It's going to be really tied to the vaccine stuff, the pandemic as well, and if it's spreading faster, variances, and of course on the potential reopening and everyone just kind of going buck wild and having a grand old time if once the market opens up. And again, I'll still be sitting here and standing here talking to you on the stocks because I don't like to gamble at the casinos. So that is one, and then of course the one that I don't know if you heard Warren Buffett called me about was RH. Of course, a lot of people know Warren Buffett loves his furniture. Same kind of pattern here that we're looking at. A little bit more of a better buy zone for me. Kind of came in around that 50-day a couple times. Really tight here as well. Basically, since the beginning of the year has been in the range between that 500 to like 475, kind of bouncing around. A little bit more pricier stock, but wow, look at this beautiful trend here. Continually holding the 50 SMA here and just kind of slowly grinding higher. Topping here a little bit due to the fact of inflation and things like that, fears, but being somewhat of a reopening play, a little bit more of a luxury item in the sense of furniture and really people purchasing a lot of new homes. I think this potentially could be a great catalyst. You kind of see I have some targets around 550 here for kind of run up here. With some short-term support coming in right where those parabolic SAR dots are, around 466. If that breaks, we can easily see it touch the 89 EMA around 450. But if it's kind of continues kind of holding tight up here and potentially trying to break out here, I like these levels here to potentially start nibbling and adding a small position into RH. So, ladies and gentlemen, thank you so much for sticking around. I really do appreciate it from the bottom of my heart. I don't know why I just did a King Kong thing there, but definitely please join the Discord. Don't forget to hit like and subscribe without further ado before you leave. And then we want to look at those affiliate links if you're interested in supporting the channel via Audible or Tastyworks if you want to open up a fantastic brokerage account, which I use. So on that note, guys, I'll see you on the next video, next live stream. Please have a safe and fun weekend, and remember, be safe out there. Peace.